Good morning, everyone. I'm Ling Min from GenZero, and I'll be bringing you inside the deals. Amidst the market uncertainties, industry actors continue to push ahead, and deals are still getting done. Let us hear from the practitioners from both the private and public sectors on how they are leaning in to help unlock capital at scale towards nature-based solutions projects. And also a gentle reminder to the audience here, feel free to drop your questions into the pigeonhole at any point in time. We don't have to wait till the end. So, Nadia, let's kickstart with you. South Pole is at the forefront of bridging supply and demand. What are some of the most significant needle-moving developments in the market or transactions that you've been observing across both nature reductions and removals?
First of all, thank you very much to GenZero for organizing such an important event for the entire market. I would say that there are a lot of things that have happened over the past 12 months, but I would like to call out just three things in summary. I would say the first would be really the shift from a really isolated project to really landscaped architectures. So we've been discussing just before GRED projects that effectively addresses leakage and baseline integrity, as well as creates a unique role for governments, where governments are incentivized as well within the project, and integrates really environmental outcomes and impact with jurisdiction overall performance. So that would be the first one. I would say the second one would be really in terms of transactions. We've seen Guyana R3 transaction with more than 37 million credits, 10 years offtake at jurisdictional scale under R3s. That's really a first of its kind sovereign deal, and that's not a project anymore, that's really national infrastructure. And as well, the evolution of market players. So Guyana sold credits to airlines for phase one Corsia. And we've seen as well big tech companies like Apple retiring GRED plus credits this year from R3. So I would say that projects really got us here for many, many years, and now countries are taking us to scale. And that's the shift that we have seen that unlocked really big deals and will continue to unlock, hopefully, over the next years.
Fantastic, Nadia. So we're actually seeing frameworks and large-scale transactions that are taking place on the back of these frameworks.
Yeah.
And just bringing it down to another practitioner, Mark. Timberland Investment Group, TIG, sits squarely on the supply side. You're helping to generate removals credits from mixed species restoration approaches, which involve native species and commercial forestry. How are you actually embedding quality and integrity into these projects?
Yeah, thank you very much, Ling Min, for the question, and thank you to GenZero and UNEP for the opportunity to be here and for organizing these really important few days. I will try to briefly say something about the why we've taken the approach that we have in our principal projects, the what it is that we're actually doing, and the how we're addressing questions of quality and integrity. So in 2020, I was leading the Global Forestry Program at the Nature Conservancy, and I think Jamie was still at World Resources Institute at the time. And I saw in the marketplace, I and others saw in the marketplace, a shift. Carbon markets were starting to develop. There was a greater recognition of the role of nature-based solutions in addressing climate change, but critically, investors were starting to ask for opportunities to invest in nature-positive and climate-positive investments. And I and others saw a gap in the marketplace, a gap for products where institutional investors, sovereign wealth funds, pension funds, financial institutions that write very large checks to invest at large scales, we didn't see products and offerings that could satisfy their needs. And so our approach, I returned to BTG Pactual, which is the largest investment bank in Latin America, and the Timberland Investment Group, where I sit, is one of the largest institutional timberland investment managers globally. I returned to BTG because together with colleagues, our idea was to meet institutional investors where they were. That is, to start as a starting point with the sorts of projects that they're comfortable investing in. Commercial investments that have well-developed markets, that have well-understood risk-return profiles, and then seek opportunities to develop very high-quality, high-integrity carbon removals by incorporating larger and larger areas of nature restoration into commercial landscapes. And so the what of what we landed on is a strategy in which we focus in Latin America, primarily in previously forested, now deforested and degraded cattle pastures, and we restore 50% of that portfolio to native biodiverse forests, and on the other 50% we plant commercial tree farms with well-known commercial species. And that's about 2.5 times the legally required area of nature protection and restoration. So that's the what. Now, how do we ensure integrity and quality? Well, the mix of those two activities, of commercial tree farms and nature restoration, is critically important, because without large areas of nature restoration, we wouldn't be able to demonstrate positive impacts on biodiversity at truly landscape scales. We wouldn't be able to demonstrate all of the positive impacts that we can on water quality. And we wouldn't have the social license that we need to operate at large scales. But equally, if we focus just on nature restoration, we wouldn't have a diversified revenue stream that institutional investors feel comfortable exposing large amount of capital to. We've had lots of discussion about the markets already. Carbon markets are, of course, volatile, but any single market has volatility. Typically, our investors look for opportunities to be exposed to multiple markets. So a carbon-only strategy wouldn't really work for them. By integrating commercial production, we have a revenue stream which can offset downturns in the carbon market, but critically, it also provides a source of rural economic activity, which is critical for long-term social license to operate in these landscapes. Our first project that we invested in, a large cattle farm about 1/3 the size of Singapore, had 9 employees at the time that we invested. It doesn't take a lot of people to run a very marginal cattle ranch in southern Brazil. We now have long-term, high-quality employment for 65 people on that same project, so a 7 times increase. If we instead had converted to pure restoration, we might have actually driven a decrease in rural employment. The increase in employment and associated economic activity allows us to sustain long-term social license and generate really tangible benefits in these rural places. There are lots of other things that we do to ensure quality as well. We have commitments to the International Finance Corporation, not just to restore certain areas, but to restore in ways that generate material increases in landscape connectivity, that increase riparian buffers and water quality by measurable amounts. And so all of that together then adds up, we think, to a high-quality, high-integrity project. Happy to talk more about all the details. The last thing I'll say is then how successful do we think we've been so far? And so at the risk of hubris, I'm pleased to be able to report that in 2021, we announced this strategy together with Conservation International, who serves as the impact advisor and is another key element in the integrity and the quality. We announced a goal to mobilize $1 billion within 5 years. 800 million of equity and 200 million of debt finance. 3 weeks ago, we were able to announce that we actually raised 50% more equity than our target, $1.25 billion, 6 months early, which makes it not just the largest reforestation fund ever raised, but the 3rd largest private timberland market fund of any kind ever raised. So we've been able to achieve scale in terms of finance. We have already invested in an area larger than Singapore, and restoration has been initiated in the Brazilian Cerrado, the world's most biodiverse seasonally dry ecosystem, on an area equal to 1/3 the size of Singapore, generating connected habitat equal to the size of Singapore. And we're just getting started. So there's a lot of other things that we would report out on, but our approach has been designed to mobilize institutional capital, which I think we've been successful at to date, and to deliver quality and integrity in measurable ways at scale.
Thank you, Mark. Sounds indeed like quite a compelling approach in terms of delivering carbon and timber, especially to the institutional investor. And obviously, congratulations on the traction you've achieved on the fundraising side and the issuance of the first VN47 credits. For a moment, let's flip on to the demand side, Jamie. So Amazon actually takes quite a unique position when it comes to procuring credits. Unlike several of your other tech peers who tends to have a skew towards removals only, Amazon has been a consistent supporter for procuring credits from both reductions and removals projects, reductions including jurisdictional REDD+, including methane abatement. Jamie, can you share with us why Amazon was prepared to take such a differentiated approach?
Thanks for having me. Thanks for that question. The world is going to need gigatons of removals, and it's going to take a long time to get there and scale. So that is one of the several harrowing imperatives that we have to deal with climate change, and it features very prominently in our strategy. I think we're still the third largest buyer in the world of direct air capture credits. Our team is very, very focused on scaling nature-based carbon removal. But the idea that removals are the only thing that counts is one of those fallacies that somehow has become very rooted in this sort of groupthink in the carbon market, despite I think being very clearly incorrect just on a first principles basis. And so we're able to take that position because it's the correct position. I'm also at risk of hubris here, but and I don't mean to convey hubris to that statement, but we have a very long-term strategy, and the groupthink shifts over time, and we're not going to have a very coherent strategy if we're just latching on to the groupthink of the day. We have to really boil things down to the first principles of the matter, because eventually the standards, the regulations, the demand is all going to converge on the science and on the first principles. And so as long as you have additionality, the atmosphere is agnostic, whether it's reduction or removal. Of course, as we move toward global net zero, everything's going to have to be balanced with removals. We know that, but that's a long ways away, and we've got lots of very important reduction segments to get after. I won't belabor that point too much, but there's a dimension of this also that's missing, I think, from this debate, which is about like what is strategically valuable for this grand undertaking of scaling market-based investment in climate mitigation. And a key piece of that is, of course, we're reforming supply, we're building industries to scale supply, we're evolving standards, but we also have to innovate on demand. We really have to broaden and innovate on demand. It's really hard to do that if you don't have any carbon credits. And on the removal side, you do a large new removals deal. Large is a relative term. These are much smaller than some of the reduction opportunities. It takes years usually for the first deliveries. We could scale our procurement there, and we are scaling our procurement there, and we would not have credits in hand at material scale for years, and I can't wait that long to innovate on demand side mechanisms. That is the thing that's actually going to help this market evolve and grow. I'll just say one last thing just to hammer that home. If all you cared about was scaling removals, and that's not all we should care about, but if you're of that ilk and that's what you're focused on, you actually want to have a portfolio that includes reductions, because you can get to more buyers and at different price points faster by blending in removals alongside a broader portfolio that includes reductions. Probably the smartest strategy for scaling demand for removals is to bring in high quality reductions alongside it. So just too often we have hyperlinear thinking and like zero sum thinking in all kinds of places in society, but this is one of them, and I think it's just incorrect. Actually, these things can work together in a harmonious way.
This is really wonderful to hear, and we're going to hammer down a little bit more on the demand side further down the conversation. But indeed, we need that portfolio approach in terms of leveraging the higher quality reductions that actually push the development of the removals projects as well. For a second, maybe let's also pivot to Florencia. So Chile, representing the government, Chile is navigating various priorities. You have Article 6 bilaterals, you have domestic carbon pricing, and you also have international nature finance simultaneously. So how does the country actually think about prioritizing and utilizing the different project types, reductions and removals across the different use cases?
Thank you, and thank you so much for the invitation. And it's really an honor to be representing the Ministry of Environment today here. I would like to start by stating that I think carbon markets for Chile are not an end on themselves. It's just a way that we can achieve our climate and development goals, and a way that we can support nature and communities. So I think that's a very important framework of how we think. Next, I think a very important development has been the carbon markets and carbon pricing roadmap that we launched last year. So this is an integrated architecture that puts together the domestic carbon tax offset system with the voluntary national and international markets. So 1 ton remove anywhere means the same, follows the same integrity principles. And of course, this is a long-term plan. We're just getting started, but the aim is to have a long-term strategy that really brings really clear rules across the different markets, going back to that fragmentation discussion from the previous panel. So that is on the domestic side. Internationally, Chile has already signed agreements with Singapore, with Switzerland, is updating the agreement with Japan. And for this, we put in place a committee that brings together different ministers that forces to ask the question, are these activities for Article 6 really additional or not? Is this something beyond NDC or not? And that classifies all the activities in 3, A, B, or C, depending first if it's something that we see that is needed for the NDC and must remain domestic, then it won't be authorized for internationally for ITMOS. If we think this activity can advance, can help us accelerate the implementation of the NDC, then there's definitely a portion that can be allowed for international transfer. And then lastly, the more like heavy ITMO Article 6 activities is where we see like the truly transformative, like clearly additional activities, where like a bigger portion could be authorized as Article 6. And nature-based solutions cuts across the 3 of them. The roadmap sets, there's a list of activities and typologies of projects for all of them. But I think it's important to recognize that while Chile already has very ambitious forest, reforestation, conservation plans in its NDC, we also recognize that the finance that we domestically can mobilize, it's not enough. So we see a role for both removals and all types of credits across the different markets. I think the vision now is to have an approach that is increasingly jurisdictional, in line with what the previous panel was discussing. And for that, we have this committee of different ministries, but we also have a new service for biodiversity and protected areas that works together with the Ministry for Agriculture. And there are different plans that we're trying to bring together. So when you look at a project, you don't really look just at the project, but you're trying to see if this fits into a bigger national strategy. And finally, I think what we're trying to do is to try to keep it simple for investors, try to keep like unified rules. When we say MRV, integrity, we are trying to keep it as simple as it can, as like easy to understand for both domestic and international investors.
Thanks, Florencia. There's music to my ears as an investor, keeping it simple for investors with a unified set of rules. And actually, you also talked about, Florencia, you mentioned about jurisdictional approach. And Nadia, one of the ways to scale conservation is through a jurisdictional approach. I know South Pole is doing some work with governments to support them in implementing jurisdictional REDD+ programs. Can you share with us what kind of support you've been providing? What are some of the challenges and opportunities that you are seeing as a private sector participant?
Yeah, I would say South Pole plays different types of roles in really scaling GRED projects. The first would be really to create this private-public partnership and to build up the right framework so that it gets implemented, that it is investable for investors, that actually it attracts as well the right buyers and gets the right eligibility criteria as well. So this is really bridging the gap between governments, private sector, and creating really an investable framework effectively. I would say then the second piece of it is every country and every project is different. So it's as well for South Pole to really bring the experience, bring as well the learnings from each of the projects to improve, like implementation in other countries. And then I would say, last but not least, it's effectively making sure that every project that is implemented becomes truly investable over time, and obviously, addressing different markets, as we spoke earlier in the earlier panels. It's as well about thinking about fungibility as well of the credits.
Sounds good. Thanks, Nadia. And actually, Florencia, listening to what Nadia is saying, is that resonating with you? What additional governance architecture does Chile think about in terms of putting in place to safeguard the community interest in terms of appropriate benefit sharing? And in general, how do you actually view these sort of public-private partnerships when it comes to implementing jurisdictional programs?
Mm-hmm. I think the benefit sharing is really at the center of how we think about carbon markets. It really cannot be an afterthought. It has to be at the center. And we have, I will say, two main layers. The first one is the climate change framework law, and that's kind of like the overall ruling mechanism that guides and sets the instruments, and if it's carbon pricing, Article 6, all of that is set in the carbon price, in the carbon change law. Then we have the new regulations like Article 6, and for that there's the committee that I was mentioning before. So for a project to be authorized under Article 6, it has to be approved under this committee that brings together the ministries from all the sectors. It's agriculture, transportation, it's finance, it's foreign affairs, environment, of course, energy. So you sit at the table all of the different long-term strategies and make sure that this is something truly additional and that is contributing to the country, something new. And then looking more at the nature-based solution, we also have, as I was saying, the new biodiversity service and protected areas together with the forestry agency. They have the national strategy on climate change and vegetation, and that's the framework for RED Plus specifically. And we're trying to expand when we think about jurisdictional and what does that mean? It's not only forest, it also means biodiversity, it means communities, it means different things. And in the same sense, when we think about an ITMO, we think about more than just emissions. We look about who owns the land, who's taking care of the communities, what's the benefit sharing plan, and making sure there's a long-term strategy. I think the second part was on public-private partnerships, and I think Chile, we have it's a clear understanding that the domestic finance only will go so far, and there's a need for mobilizing international finance and for mobilizing private finance. And for that, the role of the state is to provide as I was saying, simple, clear rules. We are trying that with the carbon markets roadmap, trying to provide a unified definition of integrity, MRV, procedures, and try to make all of these different markets communicate domestically, internationally. And this translates into different models. There's some programmatic approaches where the state is developing programs and then privates come and develop certain types of specific activities, or in other cases it's the privates that have identified new areas that could be potential for investment and long-term partnerships. But in the end, it's all about a long-term partnership. It's about a long-term strategy, and about, if you're thinking about public-private partnerships, it's thinking about in the long term.
Wonderful. And actually talking about public-private partnerships, even as we apply that at the project level, Mark, as you mentioned, you've been fairly successful in fundraising. You've done that. You've managed to mobilize capital from both the public and private sectors, both equity and debt. So can you maybe share with us what were some of the contractual features or structural mechanisms that have been being baked into these deals that made them bankable today?
Yeah, thank you very much. A good question. Well, I'd say the first part of the answer is in the design of the investment program itself. So the incorporation of a revenue stream from commercial timber production, which is a little bit different from the standard sort of timber business in the regions in which we're investing, but which is a sort of a somewhat de-risked revenue stream. And then the commitment to large areas of nature restoration. So having those actually, the commitment to execute on both parts of the strategy in equal sort of balance was a sort of fundamental element of all of those agreements. I would say the other two elements, sort of structural elements that were critical in finalizing some of the equity and debt participation were first having very good monitoring in place, monitoring and reporting. And so that includes sort of traditional forest sector monitoring, being Forest Stewardship Council certified, applying the climate and community biodiversity standard to our VCS projects. Some of the existing infrastructure for monitoring and reporting and sort of demonstrating sustainability were baked in. But we also took on additional obligations to really, in a very granular way, understand and report to these investors on our community and social impacts and our biodiversity impacts in a sort of a much more granular way than we have in other programs. And then in addition, we also took on some specific KPIs, some specific performance indicators that we have to perform against, which we felt comfortable doing given sort of the resourcing available to the program, both from our own teams and from the support of Conservation International as our impact advisor. But we have committed to reach, as I mentioned, certain targets with regards to habitat connectivity, and certain targets with regards to protecting watersheds and water quality. And our ability to sort of understand what it would take to deliver on those KPIs and commit to measurable, clear, transparent monitoring around them, I think gave many of those entities comfort and conviction that their participation would hopefully not just meet their financial targets, but also meet their development and sort of other broader missions.
Fantastic. It sounds like beyond sort of just the commercial revenues of timber incorporating the carbon, very robust monitoring and reporting and KPIs are key elements and contractual features that will help to attract, I guess, both investors and potentially buyers as well. So for a moment, switching to Jamie as a buyer, listening to what Mark was explaining around project integrity and contractual features, and of course, Amazon is well known to be one of the buyers out there with very robust quality requirements. Looking and hearing on that, what is considered good enough for you? And are these elements that we have seen in the markets and projects today good enough for you as a buyer?
Thanks. Yeah, well, I guess one of the things that characterizes Amazon's approach is that we're not spread across dozens of different project types. We decided very early on, with some advice from some of our senior leadership, that we're not going to do everything well, and we'll do nothing well if we try to do everything. And so focus in a few places you can come to really understand deeply, and you're going to be much more successful. And so all of our buying starts with our internal science team. We kind of go to the whiteboard and say, how would we do impact evaluation in a project type like this? And then we crosswalk that to the existing standards. Inevitably, we find gaps, and then we think systematically about how we might close those gaps. The Abacus label in Vera's ecosystem is an example, a product of that kind of work. And the short answer to your question, what is good enough, is we have to believe it. We have to believe that the accounting is rigorous, that the math works. We have to believe that the project itself is socially beneficial. That's a very important piece. We draw on the human rights and social impact team that looks at that kind of dimension across all of Amazon's businesses. They also support us in this kind of purchasing. But that is table stakes, for us, and I would say what is maybe more unique about Amazon's approach, or at least I have become a broken record about this, but I still don't hear it echoed back in the space, and so I'm going to continue to say it, which is that getting the accounting right and removing or reducing tons is good and important, but we have an opportunity in these kinds of investments to be far more catalytic about shifting the systems that govern humanity's capability to deal with climate change, whether it's the advancement of new technology or the institution of new government policies, new ways of governments working together with local communities on forest governance. It's a target-rich environment to find pressure points to have an impact well beyond the accounting boundary of the carbon credits. And so Amazon, we have sort of a builder's culture, and good builders are restless and dissatisfied always. And I'm very restless about the scale of impact that we're really going to have at the end of the day. And I'm chronically dissatisfied with really good projects that get the accounting right, that get the social dimension right, that do what they say they do. And yet I can tell there's just that multiplier effect isn't there, or it's not as big as I'd like it to be. So that's what we really obsess about, and that really characterizes where we end up focusing. It explains why we helped to create the LEAF Coalition and are focusing on jurisdictional scale approaches over isolated projects. It explains why we are interested in working with governments on restoration and reclaiming lands from land speculators and making those lands available for restoration. There are other examples of that in other segments that we're in and are thinking about entering.
It's actually lovely to hear around the catalytic impact that Amazon's looking to play, the leadership role in the market. Restlessness and dissatisfaction. Project developer, maybe Mark, listening to that, how does it feel to you when buyers might layer on additional requirements because of their kind of impetus to look for more, look for the best? What are the cost implications in terms of projects? And aside from players like Amazon, are you seeing sufficient demand from other buyers who may be willing to pay a premium for such products?
Yeah, that's a great question. And I mean, I think it's useful to maybe separate kind of two concepts in that response, integrity and quality. And I would say that we can think of integrity as meaning the accounting is right? It is additional carbon is being removed from the atmosphere. There is a benefit to this project that you can actually point to and believe in. And then quality is all of the other factors that high quality buyers seek. So in addition to the integrity, the social benefits, the biodiversity benefits, the catalytic impact. And I think that's useful because for us as a supplier, we are in a slightly privileged position because we're a large institution, we are well financed, we're able to take on quite a bit. But for other projects, it can be difficult to meet all of these standards. And so there are lots of different kinds of buyers in the market. I think that integrity is a threshold issue, right? If a project can't demonstrate that in fact it's generating a climate benefit, then a credit should not be issued and it should not transact. And then quality can be a gradient. And there are some projects which might be very good for removals and don't really have many other benefits. A lot of technological carbon capture projects may sort of fall into that category. They can remove carbon, but they may not restore biodiversity at scale, et cetera. They're still extremely valuable. I mean, Jamie was talking about the removals versus avoided emissions kind of debate, which is really not a very useful debate. There's a similar technological versus NBS debate, which also I think is not very useful. We need all of the above. So I think it's okay for there to be a high integrity project which has sort of low co-benefits, which might score low on the quality scale. But there are projects that can deliver high co-benefits and score high on the quality scale. And we do still see buyers willing to pay for those in the market. What I would say is that the scale becomes really important there. Often, some of the projects with really high social benefits are small scale. The challenge is that to be able to demonstrate that quality, you need to be able to monitor and report. And monitoring and reporting at small scales can become quite costly and difficult, or even beyond the capacity of small developers to deliver on. So I think there is a bit of a tension there. We're fortunate that there are buyers like Amazon, Microsoft has been playing a key role, others that are willing to really try and be catalytic with their investments and work with developers and work with some of the carbon market infrastructure to develop these capacities. There are a much larger number of buyers that are smaller buyers, financial institutions, large corporates that might be buying 10 or 50 or 100,000 credits a year. They don't really have the capacity to play quite the same role that an Amazon can, but who are willing to pay for quality. I think we need to be cognizant that delivering quality is one thing, demonstrating that you're delivering quality is a second, and that the cost, there's a gap between those two that can be quite costly for smaller projects.
That's interesting. I really like that. Sort of carbon integrity is almost like the threshold or the floor, and you have quality on a spectrum or gradient, and potentially you're going to find buyers of different requirements fulfilling that. Nadia, are you observing that as well as an intermediary in the market who's servicing the requirements of the buyers?
Yeah, I would say that there are different, just to add to what you said, Mark, there are different typologies of buyers. And like thinking about this question, I would as well consider that I would say like the biggest issue is not necessarily the willingness to pay for a premium, but it's more really like this hyper fragmented, rules. If I pick up, for instance, the example of Corsia, what is happening with Corsia at the moment. So like having this new layering, of rules that are coming, is effectively really fragmenting as well the demand at a moment where Corsia demand is supposed to peak, like 20 months away from phase 1 obligation. So this creates much more disruptions and as well much less willingness to pay for a premium because it creates a lot of instability in the market. So like adding to what you said, there is as well this element of, as it was mentioned earlier in the previous panel, of having rules that are not harmonized and that are creating a lot of uncertainty on the supply side.
Yes, indeed. So, and actually, because we're talking about demand from the large corporates, actually, I would like to pull out an interesting question already from the floor that's coming up, if I may. Large companies lead the way on big purchases and offtake agreements. How do we expand accessibility to more companies who may have fewer resources for due diligence and transaction structuring? And I guess it's a question really for Jamie, because you have a big internal science team that can do all of these. How can we help those who have fewer resources?
So this has been part of our thinking since the very beginning. And it's never been our strategy to sprint the marathon by ourselves and find ourselves out of breath and alone somewhere down the line. We have to go together, and even just Amazon meeting our net zero commitment by 2040, it covers all 3 scopes. So we have to mind our suppliers for sure, and all of that, and also our enterprise customers have expectations of us as well. So you put all that together, and within Amazon's value chain alone, we're talking about millions of businesses, and there are globally, I think, like 6,000 or 7,000 companies that purchase carbon credits. So just within Amazon's value chain, right? So we have this massive challenge in figuring out how you shepherd in millions of businesses that a lot of these companies won't know what a carbon offset is, won't have those internal approvals to participate, don't know how to source, don't know how to diligence, don't know how to contract, don't know what pricing, what all that, don't know how to use the carbon credits, what to say about it, how to get business value, or experiment with getting business value out of the use of those credits. So that is one of the most significant and underappreciated imperatives for innovation in this space, broadly defined, and it's not something that the standards bodies or the alphabet soup can solve for us. It's really the companies have to solve this. And so Amazon has launched, we have what we call the Sustainability Exchange, which is really mostly a set of tools and models and playbooks and things that are designed to help our suppliers decarbonize. But there's a module in that exchange now called the credit service, which simply allows our value chain partners to purchase carbon credits from Amazon's portfolio. It's not a brokerage, it's not a profit center, it's not that kind of thing. My team purchases for Amazon to meet the climate pledge. Our value chain partners, provided they meet certain qualifications in terms of their commitments to decarbonization, can simply purchase those credits themselves. There are other playbooks as well. I see companies deferring to ratings agencies. I see you can work with brokers. There are other things, but this is the big brother strategy. And if you've got a big company in your value chain, and everybody does somewhere, that is doing this and has internal teams, capabilities, is buying for themselves, creating essentially a safe harbor, I think this is potentially a really powerful way to really facilitate companies to come into the market.
Fantastic. Really love that, creating that playbook for the industry to emulate. Actually, this question maybe also can go to Mark, because you have been working with other large corporate buyers, including Microsoft, Meta, and probably increasingly working with other mid-sized firms as well. How are you helping these projects become more accessible to these companies, large or small?
Yeah, a good question, and there's not a single answer. I mean, I think, again, companies like Amazon, like Microsoft, like others, are playing a really helpful role with their supply chains. I mean, we saw some of Apple's suppliers invest in the Climate Asset Management Carbon Fund. I think Apple came first and brought some of their suppliers along with them. There's the Amazon exchange that Jamie just talked about. Salesforce has announced a similar platform. I don't know if it's similar, but a platform also to help their suppliers access credits that are approved. I think that some of the developing infrastructure also will go quite a long way. I mean, I see Tommy here in the front row. Ratings agencies are increasingly relied upon by these mid-sized buyers. Ratings are seen as a way to have comfort that a buyer understands a project, because particularly when we're talking about NBS, sort of every project is different and it's complicated. And for smaller buyers, it's very difficult to know whether you're buying from a good project or not if you don't have the capacity to sort of really diligence it. So I think ratings agencies have an increasingly important role to play. There's, I think, a need for greater and greater convergence among how ratings agencies look at the same project. I think that's coming. I think that there's also the contracting process is, I think, a challenge for many companies. Often carbon credit purchases fit into the same team which has been doing renewable energy agreements, power purchase agreements, which are very sort of structured and very sort of copy and paste, sort of replicable. It's not always the case for an NBS project. I don't have a good solution there, but that is a recurring challenge. But the final thing I would say is that what we've found is that as our buyers have been public about their choice to purchase credits from us, and we've heard about this from other colleagues, Thiago Picola from Regreen is in the audience, and I know Regreen has many of the same buyers, and I think probably has had a similar experience. As these transactions are announced, then it draws attention to our projects, and we receive more and more incoming inquiries. Because I would say the final element is that it's very difficult for buyers, small or mid-sized buyers, to find projects, right? There's not a sort of a central place you can go to. You can dig through a registry and try and see projects that are issuing credits, but it's very difficult to understand necessarily what you're looking at. So finding a consistent source is another challenge, and I think the big buyers have been playing a constructive role there as well.
Wonderful. And Nadia, because earlier you spoke about, aside from the voluntary corporate side, the rules within the compliance space, including CORSIA, could also shift and shape behaviors in terms of allowing for supply. Actually, that's one interesting question from the audience as well, if you can pull it up. Are varying requirements across different jurisdictions and compliance schemes, including the ETS, Article 6, CORSIA, limiting the supply of eligible projects? And actually, I would like this question to go to both Florencia and Nadia, if you can comment on it.
Yes. So I would say what we observe from a South Pole perspective is that definitely, because there are different rules of eligibility that are coming. I mean, it started really with ICAO and like implementation for CORSIA. Now it's moving into like the EU Commission that is actually reviewing as well those rules. As I was saying before, it is effectively narrowing down like the supply that is allowed to float in a market that is expected to be a 200 million tons market for phase 1 and 500 in phase 2. So this is definitely a major problem because it delays demand and it creates a lot of confusion as well in the market. That's what we observe.
And Florencia, are you observing similar sort of trend lines in terms of various requirements, or you've managed to keep it fairly consistent as you try to implement some of these?
I will agree. It's definitely a challenge. I observe this in real life. I don't know if it's limiting the supply of eligible projects. What I do notice is confusion when someone is developing a project and then has to decide where do they want to sell it, and if they can, in the case of Chile, that you can sell part of it internationally, how does that work? Even in a country like Chile that has developed a current roadmap and has a system that is integrated, it's not that easy. It requires expertise. The teams that are actually implementing this type of projects have been working on the market for decades. Those are the type of teams doing it. And I think because it requires a lot of knowledge, it's like a very complex market. So I think maybe it's not only the different requirements, but it's the complexity of the market itself that limits the participation of new actors. I don't know if it's the supply of eligible projects itself. For us, at least in Chile, what we see is more in terms of confusion on where to participate and how to allocate credits and how to manage the transfer between national and international markets.
Right, so it's much more around the clarity of rules on how to allocate the use of the credits towards different compliance or voluntary requirements. That's much more pertinent. Finally, maybe I'll just go back to Jamie for a moment. Is essentially on the voluntary side, demand seems to be fairly concentrated with a few major buyers. Of course, you talked about the much larger supplier pool that you're activating. At the same time, any signaling of weaker support from these major buyers will have dampening effect on the industry. So are you in this for the long term? And how can we reassure the market that the demand side is actually durable enough so it can justify the long-term capital commitments from investors, from project developers to generate high-quality carbon projects in the nature space?
Well, we're committed to our goals. But as I mentioned in some prior interventions, we do need to broaden demand, and this has been top of mind for us for years now, not just recently. So that's a key challenge, and I think there are other ways that folks can find ways to help on that front. But I would say that the recent kind of shifts, we're going to see more discipline, and that's a good thing. So it's really important to get a quick kickstart and firing gun and we're off to the races, but we've seen some lack of discipline in project design and cost structure and cost effectiveness, focusing on the things that are really scalable, taking the time to integrate project development with government policy at the outset and not as an afterthought on the back end. The fact that we have places where there are projects and the governments aren't even aware of them is like unacceptable to me. So I think it's going to be this is all natural and part of the kind of maturation of the market, and it's going to bring an era of a little bit more disciplined approach on the supply side, and I really welcome that.
Fantastic. So hopefully more disciplined maturation of the market. And with that, maybe one final closing question to all of the panelists. If each of you could change one thing or introduce one thing, could be a policy, a standard, a market convention, that would materially increase the volumes of transactable, high-quality nature finance projects, what would that be? Yeah, I can start with Mark.
Sure. Thank you, and thank you again for the opportunity to participate in the panel. This is not any terrific new insight, but I would say moving increasingly towards compliance markets, that because greater demand will drive sort of all the other changes through the market that I think we all want to see.
Jamie?
There's like a rush of like several things coming through my
Only
mind.
one.
And some of the things would be inappropriate for me to say probably on this stage. I think that we need to get to a place where it's a little bit more obvious for sustainability teams as to what to say to their CFO about why they should be purchasing carbon credits. And there's not an answer to that. There's answers to that for different companies of different flavors and different segments. But that I would, if I had a magic wand, that's what I would get. Yeah.
Florencia.
I think I'm going to go with less fragmentation, but from a country perspective. And what I mean is, what I mentioned in these committees, that you have all the ministries, all the perspectives. That means that you need to align so many sectors that already have long-term strategies. And in practice, what you name, what for you is a co-benefit, for another sector is a long-term strategy, and that is not easy. So trying to have a one country perspective that allows you to have this jurisdictional approach and reduce fragmentation, I think will be my one desire.
Okay, Nadia?
It's actually hard to pick just one, but I'll try. I would say harmonized eligibility across, compliance markets, because what we are lacking is really predictability, so that it becomes investable, that buyers get more comfort, and that it becomes effectively an ongoing market. So I would pick really.
Right, so if you're in compliance, make it easier for CFOs to say yes. Our jurisdictional frameworks and reducing fragmentation, and also harmonizing eligibility. So in closing, we've heard that actually false binaries such as reductions versus removals, nature versus tag, native species versus commercial forestry, they don't seem to exist, and they certainly don't need to exist. And we've also heard from practitioners on the real deals that are getting done. High quality projects are being developed, just incorporating native and commercial species, delivering both carbon and timber. We have structures and mechanisms that are already in place today to make deals bankable. And public-private partnerships are already underway for jurisdictional programs. And perhaps most importantly, buyers are procuring credits from both reductions and removals, although we do need to ensure that this demand remains durable to ensure that long-term capital continues to flow into these projects. So real deals are getting done, and I hope you can be a part of it too. My thanks to Nadia, Florencia, Jamie, Mark, 4 people who are doing exactly that with real capital, real policy, and real accountability. Please join me in thanking them.